with this wedge pattern, what I'm looking for this, I'm looking to identify a high point of the wedge. I'm looking to identify the low point of the range, and pretty much I'm connecting the dots. I can see that on the upper end here, our highs are getting lower, right? So our highest high right there, and then progressively they're getting lower and lower. And then just the exact opposite on the low side. You can see my initial low is right here with the circle, and then my lows are getting higher and higher. And this is going to be that consolidation pattern. Pretty much the range of price movement is getting smaller and smaller. Imagine it being like you squeezing a spring. At some point, that potential energy needs to burst out somewhere, and that's when we see our breakout. Now, the thing to remember with wedge patterns, right? There are certain patterns out there, certain breakout patterns where you can form a directional bias. You have your flags, you have your ascending and descending triangle, stuff like that. A wedge pattern or a neutral triangle pattern like this is pretty neutral, meaning that the pattern in itself doesn't necessarily tell us that a breakout is more likely to happen to the upside or the downside. So we have to use other price action clues, and that comes from your overall analysis, which in my opinion, I think you should be doing anyway. Now, in this particular pattern, the interesting thing is that, again, we have held a previous level of structure support. We have not violated this level. Therefore, based on my rules, lower low, lower close, we cannot, or I cannot make a prediction that price is likely to go lower versus higher. There's also nothing on here that says I should expect price action to go higher versus lower. So the question is, what do you do? And the answer is you wait for confirmation, right? There are going to be certain circumstances where you can get involved in a trade in advance of the breakout, meaning you're anticipating a breakout in a certain direction based off certain clues that the market will give you. But a more conservative approach is just to wait for the market to show you. Something I tell the traders that I work with all the time is that we want to be predictive in our analysis and reactive in our execution, meaning that our job as traders is predicting. All right, I think price is going to this, I think price is going to do that. But just because we predict doesn't mean we throw money on the table and have a bet on it. We wait for price action to give us a clue. We wait for price action to confirm that our prediction is more likely to be right versus wrong. And that's what I would wait for here. Now, there are a few ways to do this based on your overall philosophy of the market and your level of aggression as well. And either way includes breaking of a key level. Now, I am a horizontal support and resistance trader, meaning that I don't really care about quote unquote trend lines, right? I look for extremes of the range. So a